Okay, thank you. Perfect, perfect, perfect. All right, so I am not going to get into like, this is how to draw a resistance line, this is how you, or support line. I'm not doing any of that. I'm doing this because most of you that are in this meeting have pretty much taken my education for options and how I've been charting, or you've taken education elsewhere that is at least going to assist you with the basics. So this is, if you don't know how to chart, sorry y'all. If you don't know how to chart, like you've never charted anything, this may go over your head, which is totally fine. You just have to go back and watch the trainings, and from there you can apply this. So a few of you have already dabbled into it. So you've been practicing, and I saw Dana, I saw you, girl, I saw you win. Congratulations. And somebody else also had a win, so congratulations. Um, what we're gonna do is I'm gonna quickly talk about charting, and then I have Riley here, you guys. Riley is a very awesome trader. We've worked together. I've had the pleasure of coaching him along with other mentors that he's had. He is what we call the king of Fibonacci. I wore my Fibonacci shirt. I found it. He knows I love Fibonacci. He loves Fibonacci. Like that is our thing. Now I'm not going to be teaching Fibonacci, but it is our thing. Like it is what we like to do when we trade. However, you'll be able to utilize the information that we have in ECA for you guys to go ahead and trade. So he's going to talk about the psychology of trading prop firms. He has actually made over $7,500 in the past few months trading prop firms. He traded Forex, and then he went to stock options, swinging stock options. And then I reached out to him and I was like, I really think you should get into futures. And I think you were a little bit skeptical. You didn't like it at first because it was so fast. And he's like, you guys, he's a swing trader. So he wasn't feeling it at first. But once he got a taste of the money and what could be made, he readjusted himself. And that's one thing that I want to say, like trading is always going to be about adapting. And Riley was like, screw that. I see what type of money can be made from this. I'm going to adapt. And he just went hardcore like studying. I'm going to have him tell you about his story, but I'm really impressed with how he transitioned and found his niche. Like he found what has worked for him and he's been able to get paid from it. So he's going to share a lot of the stuff that goes on with trading futures because it is such a volatile market. It is very different from Forex as far as how the pay works and stock options. So mentally, you got to be ready for it. All right, so we're going to get straight to it. How many of you trade gold? I'm going to quickly chart gold. Now, like I mentioned yesterday, the great thing about this is we already have Idris, right? I always say his name wrong. And I absolutely adore him. Like he's hilarious. Amazing trade ideas for gold. And as we mentioned yesterday, you are going to be able to utilize those trade ideas with futures. So there's really is nothing new. Like you just have to understand how this works. So you can connect your broker to it, just so you know. I have paper trading connected to it. So what you're going to do is you're going to click on this bottom icon on the right and click maximize panel. You'll click on trade and then you'll select paper trading account, which is what I put here. And you can see I've just been playing around with it. So you can do that while you practice. If you don't want to open an account with a broker yet, this is an option through TradingView. I don't know if it applies to a free account or not. I can't comment on that. I have a paid account. So if someone with a free account has it, if that option is available, please feel free to comment yes or no in the chat. So if somebody is watching, they can be aware. Now, when I am trading futures, it's the same thing with stock options. I am always looking at a higher time frame first. So I start at my weekly and I see if there's any major levels that I need to notate. As you can see, gold has been pretty much consolidating, but we've been struggling to break this area right here. Now, if you want to do wicks, you can do wicks or you can do candle bodies. It's completely up to you. Just understand that wicks on a higher time frame are candles on a smaller time frame. So it'll look like slippage if I put it right here. And this gives me a little bit more accurate of a level, okay? Just so you guys know. So that's that. Now there is a support here. I could notate that, right? Very simple, support, bam. And I'm just notating this as my weekly. We're nowhere near it, but that's what you would do. Again, keeping this very basic. Now I'm going to adjust my level just so that there aren't any candles slipping, so you can see where I just had to adjust that. We've been pretty much consolidating. For my stock option students, what do you guys see? Or maybe someone more experienced, but I know my stock option students know this. So what do you guys see here? What is gold doing at this moment? Any brave souls? There's a gap, right? Yeah, exactly. There's a gap. Now, normally, like you can notate a gap like this. I don't do this because we're going to be using smaller time frames. So smaller time frames, if you draw a box on a higher time frame, it's going to look completely confusing, and we're not going to do that. So what I like to do is I like to notate the gap like this. And I have a video on this in ECA and my YouTube if you are not familiar with my channel. Okay, so I'm notating my gap, right? Now, if this candle closes like this, we filled the gap. We have filled it, and there's a possibility we can go down, or we're gonna break and continue to go up. So there's two things that can happen, but we still have more time with the market. It's about 4 hours left. Well, 5 hours, I should say. So at this point, I've notated this. There's really not much I'm going to do from here. Personally, I love 4 hour and 1 hour levels. That is something I love. Riley, what about you?
I'm right there with you. 1 hour is
1
1 hour and
hour?
4 hours the best.
So I personally like 4 hour and I like 1 hour. 4 hour with gold has worked really well with me. Now in Q, 1 hour works good as well, but 4 hour and 1 hour levels really, really, really work for me personally. So if I do see any structure, I'm notating it. Anything I see on the 4 hour or the 1 hour, you are going to have to play with this to see what you like. I want to make that very clear, okay? So right here, we can see there's a lot of stop. It's stopping here a lot. So I'm going to go ahead and notate that. And the reason why I'm notating that is if I get a break and retest on top of this gap on a smaller time frame, I'll take it up to my 4 hour level. 1 hour is going to allow you to see more structure. So the 1 hour is really good if you want to pay attention to market structure, if you want to see if there's a break and retest to market structure. For example, like if you guys know with my homework, bam, here's a high. We broke and retested that high. We have a 2 candle retest on the 1 hour, which is great. And we're shooting up. So the 1 hour, excuse me, is absolutely great for that. I like to look at the 1 hour before I get into any trading. So I'll have it marked up for the whole week. Like I have my 4 hour levels, I have my weekly levels, all that good stuff. I'll then go to the 1 hour to see if we are by any form of market structure. So for example, today between 8 and 10 a.m., we were literally retesting market structure. Okay, that's what we were doing. Now, yes, there is a gap on the daily, but as far as structure is concerned, we were breaking and retesting it. And we can see that there is a beautiful, beautiful uptrend with gold. Does everybody see that? I'm gonna have to turn off my video. All right, y'all see that? Excuse me. I'm trying to put my phone on do not disturb. Okay. All right, awesome, awesome, awesome. All right, so now if I wanted to look at this, again, if you are part of my stock options group, you guys know I like to look at smaller time frames. So I'm gonna put my 15, I put my 5, and I put my 2. What happened here on the 15 and the 5 minute, you guys? 15 on the right, 5 here. Y'all not typing fast enough. Come on. I don't even think, are you guys able to talk? I don't know if you're able to talk. Break and retest, right? Break and retest. Look, break, retest, okay? Break and retest. So we have an inverted hammer. And what we're looking for now is right an opportunity to get in. Now, gold has moved quite a bit. It's probably going to do a bigger pullback down, but I'm going to show you what we do. All right, so don't count this as me live trading. But what you're going to do is you're going to click this buy button. Okay, couple ways you can do this, and I'm going to show you. Let's say I want my take profit to be this 4 hour. I'm in right now. I can click this plus sign here, and I can add a limit order. Now it's going to be a sell limit because I'm buying. So if you come from stock options, you're used to this. Don't pay attention to what the market's doing. Right now, I'm showing you the process of getting in and out of a trade. So you can see that. Let's say I want to put my stop loss slightly below this structure. I click on this plus sign right here and I put my stop. And I literally have everything I need. I can drag my stop loss. I can drag my take profit. If I want to exit my position, I just click this X. And there's a possibility these two will stay on. If they do, just click the X on those. Okay. If I want to buy more contracts, it's a little bit different. If I decide I want to buy another contract right now, it's going to move my current position where I bought my additional contract. So for example, let's say I want to buy another one right now. It just moved my entry to where the second entry was, which is weird. I don't know why it does that. Don't ask me. I'm just telling you that so you guys know. Okay. So again, if I want to exit that position, I can hit X, or I can sell off and I can change the quantity. So if I'm in two positions, I can do this and hit sell. Personally, if you see me in my stories, I like to just hit the X button. Everybody with me on that? All right, cool. Now you can display how you want to look at this. I'm sorry if my dog goes off. Hold on, y'all. All right, you got to go. Go, go, go. Okay. All right, so sorry, y'all. Okay, what was I saying? Okay, yes, I can decide if I want to see ticks or money. So for example, if I right click and go to my settings under the trading section, I can determine if I want my profit shown in ticks, percentage, or money. So you do whatever works for you. Try each one out, see what happens. But let's say I do money. Now I can see that I'm down $13 on this. Now this is the mini for, I mean, this is the smaller, the micro for gold. So it's not going to cost as much. I'm not going to lose as much. It's much more affordable. Remember, you want to make sure that you're doing your micros before you get into your minis, because your minis are going to have you at $10 per tick. Okay. You can see right here that we're down quite a bit. If I set this back to ticks, that's 11 ticks. I would be down $120 right now. So if you can't afford that, look, just this little bitty candle right here, just from here to here, that's negative $130 if you do not use a micro contract. So as you being new, I highly, highly, highly recommend you stick with the micros, which are going to have the M in front of the symbol. Everybody with me on that? Please, please, please. There is a huge, huge, huge difference. Okay, so I want to exit my trade. I can hit this X. It pulls me out, and then I do have to manually exit this. So that's one way that you can get in. If you don't have the plus sign here, right click on your axis where the numbers are at and turn on your plus button. All right, guys. All right, super simple here. So let's go back to our time frame here. Now we see gold that it, even though we got a break and retest, it's coming back down. The candle hasn't closed, so it could go right back up here, but it is struggling. It is struggling right now at this moment. If you are a Fibonacci trader, highly recommend utilizing Fibonacci. I am not teaching a Fibonacci class. I've done it one time with ECA. It's in the advanced section. You can watch that. Other than that, I don't talk about Fibonacci and anything else. Okay, guys? So you want to utilize market structure. If you see that this is not respecting this gap, you want to wait to see how price reacts to this area. Now you can put an order in here. You can do a limit. So for example, when price comes down here, if I assume it's going to go back up, my buy limit will activate, and I can also put my stop loss as well. So I can put my stop and I can put my take profit. You guys see that? So while I'm waiting for it to come down, I can just chill, sit on my hands. It'll make a noise once activated, and I've already calculated my risk, and I'm okay with that. Pretty simple, right, guys? All right. Easy, right? Okay, good. I'm glad you said that. Now, there is another way you can do this as well. I don't use this way. I found the way that I show you the easiest way to do it, just in my opinion. But you can hit Shift T on your keyboard, and this is going to pop up right here where you can set a limit order. You can do a market order and add a take profit and a stop loss. You can play with this. There also is a DOM. So if you are from stock options and you have used Active Trader, you also have the option of using the DOM. Okay, so you can go here and you can select where you want to get in and get out. All right. Yeah, I can show you how I activated it. But does everybody understand this right here? You'll have to play with this. All right, cool. For your paper trading, you're going to click on the bottom right-hand side where it says maximize panel. Let me see if I can sign out. Let me see. Log out. There we go. It'll look like this. On the left-hand side, you're going to click on paper trading, connect, and then bam, you're in there. And then you click this minimize button and it'll show you. So let's say right now we're going to quickly, let's just say we're getting into the sell. I'm just showing you. I can hit this sell. I can put my stop loss above here, and I can put my take profit right by my buy limit. And that's it. Make sense? We're going to look at something else. All right, I'm going to close all these out. All right, next we're going to look at, do I have it on here? Oh, this looks like trash. All right, well, NQ is not moving too nice right now, but if you trade NASDAQ, you can trade this as well. Right now, it looks horrible. So if I was trading this personally, I wouldn't get in unless we got a break and retest of this support or a breakout of this consolidation. So right now with NAS, I'm not touching this. This looks like trash. Let's say you want to do, you guys, some of you said you like to do the Dow Jones, right? So right here, you can see we've been in a really nice uptrend. We're doing a pullback. I haven't marked it up, but let's mark it up real quick. Yes, Laura, buy, sell, that's it. The only thing that's really synonymous is that you have your sell limits and your buy limits, which is just like stock options. So like, for example, with stock options, when we buy a put or a call, we're always selling off on our position. It's pretty much like that, but it's reverse. It's the same, but reverse at the same time. So for example, if I wanted to get into a buy, I buy right now. If the exiting position is going to be a sell limit, right? So if I go to limit, it's a sell limit. That's going to sell me off on my trade. If I were to do a sell, if I were to sell and hit the sell button to exit the position, it's going to be a buy limit. Do you see that? I'm waiting for you to reply. Okay, perfect. Okay. Oh, I'm on the weekly right here. So if you guys don't want to do weekly, that's fine, but I highly recommend at least utilizing your 4 or your 1 hour. I wait for a price action confirmation on the 1 hour and or the 15-minute. Okay, so I'm going to show you my gold trade. I actually gave this out in my subscriber channel, but here we go. So this was gold right here. Gold, I was waiting for it to stay on top of this. Now we got a quick breakout during news, gave us an opportunity for a quick scalp, but I wanted to see how it was going to react to the previous day high. And even though we were by a weekly level, I didn't care about that because I already knew like we were going to go up, like it was super bullish. So I went ahead and I used market structure. I did use Fibonacci, but market structure right here gave me the confirmation. I have a 2 spinning top candle confirmation showing rejection to that structure. Then I waited, like I saw that. Once I saw that, I went down to a smaller time frame. You wait for price to stay above. Now I also drew like a little trend line here. I saw we got a break and retest of my trend line, which is a great thing. This is a flag pattern. And then I waited for price to close above here. Once I saw price close above my 15-minute, I did go to my 5-minute just to confirm that it was staying on top of the level, and it took off. That was literally what was done here in this trade. Make sense? You don't even have to go down to the 5 minute if you don't want, but with stock options, we do use smaller time frames. All right. Now I'm going to show you, since I'm on a paper trading account, what it looks like to trade one of the big dogs and how it hurts. So I'm going to do let's see what we're doing. We're buying. So I'm going to do a sell because right now it's going up. And I'm going to take this on the bottom and I'm going to push this up just so you can see. So you can see, like, I'm already down $40. I'm down $50. Where if I were to trade this on a smaller account, it would only be a couple dollars. So I don't want you guys to mess with this until you feel like you are 100% ready. Like, use the smaller entities to trade. I know I keep saying that, but once you get a taste of how good the money is, it's going to be really hard for you to come back down. All right. If you trade SPY or SPX, you're going to be looking at ES. ES pays beautifully, pays $12.50 a tick. So you can see real quick. I kind of want it to go down just a little bit. Just go down so I can show, please. Right? And this is great. Personally, I like it for scalping. Like, I like it to make quick money, quick money, right? So we're up 12.50. I really want this to come down so they could see. We're up $25. Now ES moves slower than NQ. So NQ pays $5 per tick, but it moves a lot faster. ES pays $12.50 per tick and it moves slower. Okay. We'll see if it hits or not. So I'm going to show you NQ as well. We'll see if it hits, but $12.50 here in profit. Let's go to NQ real quick. I'm going to show you how this one, okay, look, we're immediately, look, we were just $40 in profit, then negative 250. Like, look, you guys see my P&L on the bottom right? I'm already up $92. Look, I'm already up. I feel like I need to be getting into a stock options trade now that I'm looking at this. Right? I'm 20 ticks. I'm up $162. You guys see this? I'm up 162. Now I do utilize structure on the 2 minute to help me move my stop loss. So for example, like, here's my stop. I will use 2 minute and 5 minute structure to help me. So I'm up already $140. But you guys, this is the big dog right here. This is the big one. If I was doing this on an MNQ, it's not going to pay me as much. So you have to be careful. The money looks great. Yeah, but if you're in the wrong direction, it hurts. And it hurts bad. Okay. And you can see how quick. Remember, 4 ticks is 1 point. So while you're sitting there taking a trade idea, talking about, oh, we got this many pips, you got to multiply that by 4 for futures. But bam, we just made $145. I'm going to, well, look. You can see we're up $257. You guys see it? And then look how quick it went down. So this is like a get your money. Don't be greedy. Use proper risk management. Okay, this is obviously if you're going to use regular NQ, right? And then if we were to use our minis, it's going to be a completely different story. A little bit more tolerable when you're in the negative. You see, like 14, 15, I'm only, look, okay, here we go. It moves so dang fast. But see how I'm only down $6? I would have been down about $100 almost if I was trading the other one. All right, I'm gonna open the room for questions and then I'm gonna let Riley do his thing. Give me 1 second while I find my Zoom controls, because I don't know where they went. Okay, here they go. Let's see. All right. I have Trade of 8. So should I get the real-time data through them or Trading View? I need to get real-time data. I have the real-time data through TradingView. So I use my prop firm account to trade. Excuse me. So that's already included. But if you're gonna sit here and practice, then yeah, for sure. Like see. Or you can trade right through Tradeovate, you guys. You can trade right through your broker. And if that's the case, then you need to go watch the videos on that. Anybody else? I think someone there was a Q&A. Is there a specific time frame you use fibs on? Whatever one you want. It could be the 1 hour, the 15 minute, the 5 minute, doesn't matter. Doesn't matter. All right, with that being said, I wanted to show you how oh, apparently I'm in a trade. What trade am I in? I'm in a trade. Let's see, right here. ES. Okay. I didn't realize I was still in this. All right. I wanted to show you the volatility just so that when Riley speaks, you 100% get an idea of what he's talking about, you guys. Okay? So at least I was in the green. Yeah, you have corn, wheat, etc. It doesn't move as much as the others, but you can try to trade those if you want. All right, with that being said, I'm going to exit. I am missing out on money right now. But I'm gonna let Riley do the talking. He is going to tell you about life, trading, futures, and the psychological toll that it can take on you. All right, Riley, are you good?
Yeah, can you hear me?
Yeah. Can you hear my landscapers?
A little bit, just
Oh,
not very much though.
so ghetto. All right. Bye.
See ya. Hey guys, let's give Jess a round of applause. It's always great to, if you guys got stuff from that, put a 1 in the chat for Jess. She's amazing. And no matter how many years I've known her, it just always seems to be, she makes things so simple to understand, and it's awesome. So, if you've ever traded a futures prop firm, put a 1 in the chat. If you have not, put a 2 in the chat. Wow. Okay. This is going to be good then. There's a lot of people, pretty much everybody has not. Okay. All right. Jess, we can still see your screen. Just, if you're aware. Okay, there we go. So I don't really have a screen to share. You guys can just look at my cool stuff in the background. So it looks like most of you guys have not traded futures prop firms, which is good. So, have any of you ever traded a Forex prop firm? Put a 1 for yes and a 2 for no. Okay, so kind of split on this one. Okay, so first I just want to touch real quick on just the basics of what a futures prop firm is. And some of you may know what a prop firm is, some of you may not. But for those of you who don't know, basically what it is it's a company that gives you the opportunity to prove to them through goal points that you can hit these milestones. And if you hit these milestones, then they're going to give you a funded account, which is still a simulated account, which can get confusing. But basically, one of the CEOs, the best thing he said was, what we are, there's a give and take, right? They give us the simulated account and they pay us profits that we make. And what they get in return is data points. We are basically data study for them. And if you want to know more about that, look into that. But all it really is it's just a company that says, hey, if you can show us you can trade, we're going to give you a simulated account and allow you to hit profit targets and withdraw money. We're going to pay you. And then in the end, the long-term goal is to get you to what they call their funded account, which is where you get actual money to trade with on a house account, so on and so on, which is something else. But the biggest difference that I've seen trading Forex prop firms and futures prop firms is really it's the volatility and the psychological effect it has on you. Like Jess said, I came from swing trading, being in trades anywhere from a couple days to a couple months, and then I went to options, swing trading options with Jess, and then she told me about futures, and I pushed back on futures in the beginning because it's completely different than it's like Jess said, if Forex and stock options had a baby on steroids, that's futures. Um, and so the biggest difference for me was I was used to trading no lower than the 4-hour time frame. Most of my trades were on the weekly, daily, and 4-hour time frame, and I just, I could get in them, I could walk away and not look at them for days or weeks. Coming to futures, first off, when you're trading a prop firm, you don't have the ability to do that because the markets close at 4:10 Eastern and reopen at 6 p.m. Eastern every single day that the market is open. With Forex, it's just throughout the entire week. You don't have to worry about it closing. You can trade overnight, all that stuff, right? And so swing trading is, for my style of swing trading, was out of the question. And that was my biggest pushback. I had never gone to a 15-minute, 5-minute, 1-minute time frame. To me, that just sounded completely insane. I didn't understand it. It had my mind all over the place. And so starting off, that was what my biggest mental struggle was to begin with, was the having the ability to adapt and adjust to lower time frames. In my mind, I didn't believe, or I didn't understand how my strategy could work on a lower time frame, because I was always told and taught and saw that the higher time frames respect structure, the higher time frames respect fibs, the higher time frames respect this, that, and the other. And it was for years and years that I had been told that, and I had learned that, and I had implemented that and believed that. So when I came to futures, it was really hard to um, understand that that wasn't the only way. And everything that Jess teaches is what you need, right? All the information you have in the back office, all the information you have in her classes and her courses and her sessions, that's what you need. There's not anything above it. Futures, I have found, is really, really, really reliant on just price action and market structure. It is, I mean, that's really what works the best. And so when I first started doing futures prop firms, I was passing challenges left and right, and I didn't really understand why. Put a one in the chat if you guys have ever done something that you thought you couldn't do, and then when you do it, you don't understand why it happened or how it happened. Have you guys ever experienced that? I know it's a weird fallacy, but have you ever experienced that? So that's what happened to me. I was passing challenge after challenge after challenge and getting payout after payout. And I was like, hey, cool, I'm getting this. And then it stopped. And I unfortunately started blowing accounts. And what I realized was that I was still trying to trade futures like I would trading options and Forex. I was still trying to hold on to trades. I would see a trade go, 500, 1,000, 1,200, 1,800, $2,000 in profit, and I would be holding it, and I would watch it go from 2,000 to 1,200 to 1,100 to 800 to 200 to negative 300 to negative 500. Boom, daily loss limit. And for those of you who don't know, okay, so some prop firms have daily loss limits where you can lose $1,000 a day, and then it restricts your account to the next day. Some prop firms, they have no daily loss limit, but they have an overall loss limit. And that goes into my next point of understanding these rules that every prop firm has. Every prop firm has their own rules. Like I said, some have daily loss limits, some only have total loss limits, some have that you're allowed to trade news, some you're not allowed to trade news. Me and her just went to battle against a firm a couple weeks ago where I had made $9,000 my first week and a half trading, put in for a payout, and they were trying to deny it because they considered it what they called windfall trading, where I had entered a trade based off the strategy 5 minutes before news release, and it went in my favor and I closed. Well, they hit me back and were like, hey, we're gonna, we're considering this windfall trading, which is basically gambling, right? It's like if you were to trade NFP or CPI without understanding why you did it and just got lucky. And so I had to go back and show them my strategy. and explain to them why I took the trade, why I exited, where my stop, all that stuff was, because that firm had a rule that applied to that. Another firm that I'm funded with that I've received payouts from doesn't. And so you have to really go in and do your own research about these firms and understand which one suits you better, right? Are you okay with a daily loss limit? Are you not okay with it? If you're not, then that firm probably isn't going to work for you. And you need to understand these things before ever going in, because if you just jump in and you're going with this firm, that firm, the other firm, and you've got all these rules that are contradicting the other firm you're with, it's going to build up a habit and you're going to get really confused, and it's going to make your journey a lot harder. So that's one of the biggest things I can tell you is understand their rules. And if you don't know what this rule means, reach out to support. Find somebody who's traded firms and ask them what this means. Google it, whatever you need to do, because you absolutely have to understand the firm, each individual firm's rules in order to play the game. Because I'm going to be honest with you, that's what this is when it comes to trading firms. These firms, yes, they want you to get to a point where you're trading their house money, but very few people get to that point. And I'm going to address the elephant in the room with these, is because they're not set up for you and me to win. And so you have to adjust your mentality to playing their game. Okay, their game is a trader pays for the challenge, they fail, they make money, the trader doesn't. Or the trader pays for the challenge, passes the challenge, never gets a payout. They still win, you don't. The trader passes the challenge, gets funded, gets another payout, or gets one payout, then never gets another payout. You would be amazed at how significantly the percentage decreases from passing a challenge to getting your first payout to receiving a second payout. I mean, it is incredibly insane the low percentage of people who receive a second payout versus, I mean, let alone a first payout, because they don't understand the rules and they're not ready here. This is going to be your biggest enemy when trading futures. The volatility, like Jess showed you between, and I'm so glad she touched on micros versus minis. I highly suggest everyone starts out at micros for the exact reason that Jess said, because once you get into the minis and you realize the difference of money you can make, it's really hard to go backwards and watch the little bit amount. I mean, if you make $100 on a micro, that's, I mean, you could make 500 or 1,000 on minis. And so once you see that with the minis, it's really hard to go back, because you get, I mean, for me personally, I got bored with seeing the little bit amount of money. Oh, I made $200. Well, this would have been 1,000 on minis. And so start out on micros. It's going to help your mindset so much, because you're going to, for those of you who've been trading for a while and have taken large losses, how big of a difference was it for you when you saw $100 loss versus $1,000 loss? Okay, when your account goes negative 100 and you're not, that's just what you're used to. I'm not saying get used to being negative, but when you see a negative $100 balance, that's a lot easier to stomach than seeing $1,000 negative balance. And that's exactly what's going to happen when you go from micros to minis. So get used to the micros first, because it's going to help you build up a tolerance to, because the volatility in futures, your price is going to fluctuate so much. I mean, you saw it when Jess took that trade. It was negative 20, negative 50, positive 100, positive 200, negative 1 or positive 160, positive 120, positive 50, right? And so it's super important that you get used to the small amounts before you get used to the large amounts, because once you're used to the large amounts, it's really hard to go to back to the small amounts. How many trades do I take a day? On average, between 1 to 3. That's it. And that brings me to my next point, is learning when enough is enough. Okay. With futures, it's really easy to go bust. It's really, because of the volatility, especially when trading prop firms, because of their rules, it's really easy to hit your daily loss limit. It's really easy, especially on minis. And that's why micros are also better, because you can have your stop losses can be in better places. allows you a larger area to breathe for your trade to breathe. Minis, it's not really like that. One of my biggest struggles trading futures was learning when to walk away. Okay, on the smaller time frames, you can find yourself taking an insane amount of trades within a 1 hour period, especially on the 5 minute, because there's a, oh, there's a setup, trade, lose. There's a setup, trade, win. There's a setup, trade, lose. There's a setup, trade, lose. There's a setup, trade, win. And you can literally do that, um, 5, 10, 15. I have a friend that when I first turned him on to prop firms, I was helping him out, and he took 38 trades, and it was like 42 minutes trading on the 5 minute. Now, he was trying to do his own thing when he first started, but that just goes to show you how fast you can get caught up in taking these trades. And so you need to learn to walk away. One cool thing about one of the firms, Top Step, is they are the first firm I know of to have a lockout button. And that has been my saving grace, because if I see myself, I have a set amount. Hey, if I lose this much in a day, I'm done. Because I know it means I'm not looking at the market correctly. I'm in my head, something's going on. And so I can hit the manual lockout button, and I am not allowed to trade that account till the market resets, right? So if I'm trading in the morning, I can't touch that trade again until the evening after the market resets, or vice versa. Let's see. So, and then psychologically, you've got to look at prop firms in just one of a couple ways. And this is unpopular opinion, but this is how it is. Take your payouts. Okay. Don't look at this account. And this is different. This is what another thing that separates Forex firms from futures firms. Okay. Now, this isn't an either or. This isn't a one or the other. This can go either way. There's people who treat these accounts as long-term accounts. There's people who treat these accounts as just single wins, right? And that's when I'm speaking on psychologically. You've got to understand how you want to look at futures firms. Forex firms, you can get $100,000, $250,000 account, $1 million in funding, whatever it is. And because they're risk parameters, you can risk 0.5%. You can risk 0.25%, and long-term trade that account for months, years, however long you want. Futures firms are not like that. Risking 0.25%, 0.5% of your account balance or your allotted thing is just not realistic. It's not going to work. And so you've got to look at one of two things. Either you're going to go for a large account with a larger drawdown and try to trade these long-term, or you're going to go for the $50,000 account or whatever and look at it as getting your single wins, right? You paid, I don't know, $50 for a 50K account. You passed the funding, or you passed the challenge. You paid your one-time fee of $150, so you're into that account $200, right? Over the next 2 weeks, you make $3,000 and you get a $1,500 payout. You've just recouped your money, right? You just recouped your $200 plus made $1,300. That is a single win. That's how you need to be looking at these future firms, in my opinion, is taking these single wins. As long as you get to that first payout, you get your money back, you've made your money. Now you're playing with all house money, right? You've made your money back. You're already ahead of 90% of traders by getting your first payout in the first place. Probably more than that, actually. And so you're winning. You're in the green. You're good to go. And then this is what sets in. This is why it's so hard to get from your first payout to your second payout, because now you understand the money that can be made. Now you understand how this can change your life. And so you want it more and more and more, right? It's the gambler's mentality. It's like an addict. It's seriously, there's people I know who are in counseling over trading because they become addicted to it. The dopamine that gets released in your brain from the wins and even the losses, right? Put a 1 in the chat if you've ever been in a trade or you're waiting to enter a trade, or you've won a trade and you realize your hand is shaking. Your heart is pumping. Your palms are sweaty, right? What's that? Throw up mom spaghetti. Like, what I mean? Have you ever been in that situation where you, like, whether you lose or you win, you realize that your adrenaline is just going insane? That is the dopamine being released that people become addicted to. So my best advice for you is, when you get funded, okay? When you get funded and you get your, knees weak, arms are sweaty. Yeah. And so when you get funded and when you get that first payout, slow it down. I know you're going to want to go heavy. You're going to want to get to that next payout. That's how I was. And you have to slow it down and reel it back in, because you're going to find yourself over trading. You're going to find yourself over leveraging, which is way easier to do in futures than it is, and in my opinion, in any other trading industry, because of the volatility that you have. But if you can reel it in and go back to what it is that you're trading, why you're taking these trades, how you're taking these trades, your confirmations, your rules, or whatever it is, you're going to find yourself taking base hits. And I've listened to CEOs of these future firms talk about some of their best traders are taking what they call base hits. They're not getting $1,000, $2,000, $3,000 per trade, right? They're getting 250, 500, 400, 175, right? They're not passing challenges in 3 days, 2 days, a week. They're passing challenges in a week, 14 days, 21 days, 30 days. Then when they get into their funded account, they're still doing that. Yeah, they're not making the 10,000, 100,000, whatever you're seeing all these people on Instagram and YouTube making, but they're making life-changing money, and it's consistent, right? And so you need to learn to be able to walk away when you've set yourself an amount that you're willing to lose per day, and that's what it's got to be. Okay, that's what it has to be. And you have to build that consistency and that habit, because whatever, I can't see how many times I've heard people say, it just got said to me today. I'm in my challenge. I'm $700 away from passing Riley. Now I can slow it down and stop the gambling. And I told my buddy, a really good friend of mine, you say that, but you've built this habit over 21, 30 days. And they say, anybody here know how long these psychologists and specialists say it takes to build a habit? And if you know, put it in chat. How long do they say it takes to build a habit? Right? 21 days. Roughly 21 days is the bare minimum. If you do the same thing for 21 days, you're starting to create a habit. 90 days it's subconscious at that point. Okay, so if you think that you're going to gamble your way through a challenge, and that because you're funded that you're going to stop doing that, I'm willing to put money on it that 99% of people that say that don't stop. They know what got them there, so they continue to do it. But I'm going to tell you right now, it's going to take, in futures, it's going to take one unknown news release. It's going to take one unknown speaker. It's going to take the market doing whatever it wants because it can, for you to go from seeing that $300, $400, $500 in a couple minutes to losing your entire account in a couple seconds. Okay, today, NQ, I watched it go. I went up 700, down 1,400, up 1,400 in a matter of 20 minutes. Not even that. I think it was like 15 minutes. Okay, and that's what I'm talking about. You've got to have these habits, and you've got to learn. Trading every day doesn't make you a better trader. I hate to say that. Looking at the charts and getting chart time makes you a better trader. Being in the market helps you become a better trader, but you don't need to trade every single day, right? Part of being a good trader up here is knowing when not to trade. That's probably more important, in my opinion, than knowing when to trade. If you can minimize your losses, you're already, in that aspect, by proxy, maximizing your wins, because you're avoiding these losses, which gives you opportunity to make the wins because you know it's not a good day to trade. Okay, so for me, the 15-minute, if I can find a setup on a 15-minute chart with futures between, so I personally trade between 8 a.m. Eastern to about 10:30 a.m. Eastern, right? I'm in Utah, so I'm mountain time. So that's 6 a.m. my time to about 8:30 my time in the morning, okay? And this brings me to my next point of knowing when to trade. Oh yeah, anxiety. Anxiety in futures is and I don't want to scare anybody away. I'm just telling you the truth of what I went through because I've been on the top with futures, I've been at the bottom and everywhere in between. And so knowing when to trade as far as, are you going to trade in the open? Are you going to trade after hours? Okay. Trading in the open requires a certain type of ability to stomach quick movement. Okay. It's the ability to stomach the quick movement, the volatility. Tokyo for me was really hard, like the after hour session, 6 p.m. Eastern and forward, because up until about 8, 9 p.m. Eastern, the market moves extremely slow. And I'm used to seeing the market jump up and down, or move up really fast, or move down consecutively. But in the after hours market, it will stay in its range for hours. Okay. And it's like a normal thing. Very rarely did I see it. I mean, I made money in the Tokyo, but very rarely did I see it have the move it has in the morning. And so once you get used to the moves in the morning, it's really hard to go to the night. So if you're a person who just can't trade in the morning, go get used to the night session. Don't try to ruin yourself by trading a session that you're not able to, because right there, you're going to have a bad mindset, right? I should be at work. I should be getting kids ready for school. I should be at the gym. I should be doing all these other things, but you're putting those things off because you want to try to trade the morning session. Look, that morning session is going to be there. It's not going to go anywhere. So until you can responsibly adapt your schedule to the more volatile session, take the shorter session. Okay. Take the shorter session or the slower session, get used to that, get some stability and some consistency built up. And then once you're able to responsibly move around your schedule where you're not going to be worried about what you should be doing, then go to the more volatile session. Because I'm telling you right now, everything that can be a distraction in the more volatile session is going to make your trading immensely harder. So I want to talk real quick about copy trading. You guys have probably been seeing, yeah, the sound order filled. Yeah, that's a trader's dream or nightmare. Order filled. It's either good or bad. Copy trading. Let's talk about that really quick. Is it a good thing or is it a bad thing? When you're starting out, don't do it. Okay. I know it's enticing. I know it is really, what's the word I'm looking for? Appealing. Some companies let you copy trade 20 accounts. Some companies let you copy trade 5 accounts. And there's always a double-edged sword to this, okay? For beginners, don't do it, because you have to remember, if you're trading one account, right, you're only focused on trading that account. If you're trading 5 accounts, let's say on one account, let's say you blow the account before you get funded. Okay, you're out $50, you're out $19, whatever the sell is or whatever's going on, right? But if you buy 5 and you blow 1 and you're copy trading, how many did you just blow? Someone tell me in chat. If you're trading 1 but copy trading 5, or right, you just blew all 5 accounts. So instead of being out $40 or 50, you're out 250. Or instead of being out 20, you're out 100. Okay, and that also does something to your psychology as well, because now for some reason, now you're gonna not just look at it as, hey, I messed up on one account. It's 5 times as much. Hey, I just messed up on all 5. And that's a harder pill to swallow, right? So until you get some experience and you really get your style down and you really get your ability down and you understand how the market moves, you understand stop losses, take profits, market structure, because market structure, right? So a previous low, say your stop goes below a previous low on Forex, right? You can be at a 0.25% risk and still be fine. Well, with futures, you put below that previous low, you're going to find out real quick that with a couple contracts, you're past your daily loss limit. So if it hits that, you blew the whole account. And if you do it on 5 accounts, you're going to start to build up this thing in your mind where it's like, I'm no good, I'm no good, I'm no good. So until you're able to effectively trade the market with one contract, or one account, please don't copy trade. Okay? If you're wanting to purchase multiple accounts, I recommend you focus on one at a time and pass each one individually, and then you have a backlog of accounts. You basically have a cushion. It's like if you know, you're trading and you build up a $5,000 cushion, you know, in order to go back to zero, you have to lose that 5,000. It's the same concept with the accounts. If you have 5 accounts, you have a cushion of accounts that you can practice on. And if you've passed 5 accounts, just that in itself is amazing. So pat yourself on the back, but have a cushion of accounts. Instead of trading them all at once, have the ability to work through a couple, okay? Taking profits is another huge thing. I can't tell you how many times, and this goes back into my struggle coming from Forex swing trading, option swing trading to futures, lower time frame, basically scalping or intraday trading, knowing when to take profits. There's some firms out there that you have to make $200 a day for a certain amount of days to get a payout, right? Be okay with that. Okay, how long do you have to work at your job every day to make $200, right? If you're making $20 an hour, that's 10 hours. You're making, you know, if you're a high paid employee and you're making $40 an hour, that's still 5 hours. With futures, you can make a couple $100 in a couple minutes. So don't get greedy. I was just talking to Jess about this a while ago. I blew a couple accounts and she was telling me, you know, what are you doing? You're too good for this. You know better than this. What's going on? It was the greed. It was not taking profits. I was comparing myself, which already is the thief of joy. You guys have heard that comparison is the thief of joy. I was comparing myself to some other traders I know that are doing huge numbers, right? Huge numbers. And I was like, well, I know I can get $3,000 a trade. I know I can get $1,500 a trade. So in my mind, I was thinking, well, 250, 300, 400 is not worth it, which is bogus, right? I mean, I'm sure everyone in here, no matter what point in your life you're at, you would not be upset if you're able to make $200 or $400 in 15 minutes and be good for the day. I mean, put a one in the chat if that'd be good for you, right? Everybody's gonna. I mean, to say no, you're just you're lying, right? So take profits, guys. Be okay with a couple $100. Okay. And the other thing for that real quick is in futures, for me personally, it was really hard to do the risk to reward, right? You'll see a lot of people that risk more than what they're making, but it's risk more on their trade than they're going for because of the volatility, right? And so that'll be a thing you've got to adjust and get used to as well, is it's not like Forex where you can risk, you know, it just doesn't work out that way with futures. Let's see. Number of contracts is a big thing too. That's going to play a huge part on your psychology. You know, if you're trading one contract, you have a much larger breathing area for your trade than if you're trading 3, right? So if you're doing bracket trading, if you're doing brackets where you manually, before you enter a trade like Jess showed, you put in your stop before you put in you put in your risk and your reward before you hit. Doing one contract is going to give you a lot more breathing room to go below or above previous structure than 4 contracts or 5 contracts. Okay, so let's say below previous structure with 1 is $150. On 3, right, that's $450. On 5, that's $500. And you're gonna see real quick how fast your money disappears between the amount of contracts. So if this is rule of thumb, if you can't successfully trade 1 contract, you're not going to trade 5. You're not going to trade 2. Can you talk about your experience with learning how to move your stop loss? What did that say? Sorry, guys. Oh, geez, the chat's here. Moving your stop loss. Well, can you say that again? I can't find that question real quick. Oh, experience with learning how to move your stop loss after your trade is activated. So I personally have a rule of thumb. Once my risk is covered by my profit, I move my stop loss to break even. Okay. For me, it sucks a lot of the time because the trade will retrace and take me out, but I didn't lose anything. And I'll usually move it to $20, $30 in profit because you got to remember the commission you pay to trade, right? If you just go to 0 break even, you might lose $20. When you mention how much you're willing to use, do you mean in dollar amount or account percent? So I always go off the dollar amount. That's what works for me personally. I need to visually see what I'm risking when I'm entering a trade. So, right, I have to be able to see. That's why I personally use the bracket that just showed where I hit buy or sell, and I have to put in what I'm willing to risk on that trade. But for me, it's easy because I know what I'm willing to risk. So it's once you have it in there, it kind of weird, but it remembers it. And so every time I hit that button, it's always at my allowed risk. When it stops me out, do I get back in? Yes and no. Most of the time, not right away. Because if I'm okay, so for me, 250, let's say it's just 250 per contract, okay? If I'm in a trade and it's going up and I'm positive 300, I move to break even and it comes back down and takes me out, there might be some momentum there, right? So I'm still going to go back to what Jess teaches. I want to go to a smaller time frame and I want to see, is it holding that line? If it's not holding that line, I'm not getting back in. If it's holding that line, I'm going to get most likely going to get back in. Not always, right? But the other thing you need to learn is knowing when to move stops to break even as well, because if you don't and it comes back to go negative, you're going to really mess yourself up because you're going to see profits and then you're going to see negativity. So just imagine it as little swings, like little swing trades, right? Jess used to always say, if you can't stomach seeing your profits go away, go negative and come back multiple times, swing trading isn't for you, because that's exactly what's going to happen. So just think of futures as mini swing trades. The other thing that Jess touched on that was, I'm really glad she did, that I had wrote down here, was changing your symbols on your chart from money to ticks. A lot of you don't even know what a tick is, right? So you don't, a lot of you in the beginning of,
Me
you're
too.
not,
I taught it yesterday.
oh, about the ticks?
Yeah, yeah.
Yeah. So a lot of you guys aren't going to even, okay, no, you know what ticks are, but it's a lot easier just to see 1 tick, 3 tick, 5 tick, -3 ticks, -5 ticks, positive 10 ticks than it is to see -50, -100, positive 200. I mean, it's cool when it's positive, but it gets really bad when it starts going red, right? When it starts turning green and then it starts going red and then it goes green, then it goes red, and it goes green. It's a lot easier just to see up 10 ticks, down 5 ticks, up 5 ticks, down 10. So psychologically, do what Jess showed. I recommend, for me, I use the money, but it's because, once again, I'm a visual person. I have to see my money. I own a business. I've owned a business for years, and so numbers is my thing. Fibonacci, so I love Fibonacci. Numbers is my thing. I have to see my numbers in comparison to what it is I'm doing. And then I think the last thing that I want to touch on that Jess kind of touched on was price action, right? I said a little bit in the beginning, futures, EMAs, Fibonacci, Gann waves, blah, blah, all that stuff is good, great, good, whatever. I mean, everything works for somebody, people use everything to trade. However, price action when it comes to futures is so important, right? It's really showing you what's going on. And that was a hard thing for me to understand, especially on the smaller time frames, was that's where the action's at. That's where the wars are happening. That's where the war between the bulls and the bears are really taking place. That's where you're seeing buyers and pullers, or buyers and sellers, pull and tug at each other, right? They're duking it out right there. And so these candlestick patterns, like if I could show you, I can't show you, but right in front of me, I have posters right here underneath my monitors that shows candlestick patterns and trading chart patterns. And even though I know these, it helps me remember that those are really what counts. Is it like Jess said, is it holding the line, right? Are your look at your candles as your soldiers and you're their general. Are your soldiers holding the front line? Or is the enemy breaking through, right? Did the enemy break through? If the enemy broke through, you've got a retreat plan, which is your stop loss. But if your soldiers are holding that front line, whether it's a level of support, a level of resistance, and you start seeing your soldiers moving forward, well, then what are you going to do, right? You're going to push. Let's go, guys. Come on. Boom. Let's go get them. Let's go get them, because your soldiers are winning. But if you're seeing that you're being defeated, and for perspective is, if you're in a buy, but sellers are beating you, that means the enemy's breaking your line. And you've got to go into some kind of defensive mode, which is your stop loss. Other than that, guys, the biggest points with prop firms, just to begin with, is know the rules. Choose your prop firm. Don't go off price. Okay, please don't do that. Please don't go off price. Okay, there's companies that will offer you, like right now, there's a company that's offering $250,000 accounts for $20 versus a company, or if you want that type of account, it's $200. Okay, lesser isn't always better, right? If you know how to trade and know how to use the prop firm game to your advantage, those smaller accounts are good. because you can use them to your advantage. You can get your payouts. If you lose, you lost $20. If you get a payout, you've got 1,000% return on your investment, right? But there's a reason that these prop firms are so cheap. Some of them, right? There's these guys are in it for business, right? They have tens of thousands of people a day buying these accounts. So there's a reason these accounts are so small. I mean, not so small, but why they're so inexpensive. And there's a reason why other companies, they just aren't going to do that, right? So you got to kind of give and take. So one, know your firm, know the rules, pick the firm according to how you want to trade your strategy, how you want to trade throughout the day. Are you okay with the daily loss limit? If not, that's not the firm. Are you okay with having these rules where you can't trade news, you can't do windfall trading, you can't trade momentum? Then don't pick that firm. You've got to find what firm works for you. The other thing is know your time. Like I said, if you have stuff to do in the morning, if you're a single mom or a dad, or you are the parent that gets the kids up for school or gets them to summer school or gets them to summer sports in the morning is not going to be good for you, because even if you do try to trade it, you're going to be in a rush and it's going to hurt you. Because I can't tell you, when I first started futures, I'd be 7:30. I usually wake my kids up at 7:30 to start getting ready for school. I would be in my office at 7:30 trading, knowing I had to get my kids up. And so every little noise I heard outside my office, I thought was my children waking up. And I have a 8, 7, and 4-year-old. So if those three get up alone together with no supervision, oh Lordy, I'm gonna wish I had not traded. So every little noise I heard distracted me from my chart. And I lost. So until I could responsibly change my schedule, which I've been able to do, that's why I traded the night session so long, because that's what worked for me. And then when I could responsibly change. So number 2, know your session. Know when to trade. Number 3 is know when to walk away. Know when enough is enough. Because if you don't have that set, if you don't set your daily loss limit for yourself, if you don't know what you're willing to lose and that's it, you're going to overtrade, and I know you're going to blow your account. Okay, this isn't just me saying I think you will. I know you're going to blow your account if you don't know when to walk away. Because like I said, especially if you're trading the smaller sessions, you're going to be able to get in 50 trades in 20 minutes. So my night session was, I would get in around 7 p.m. Eastern, and I'd go to bed around 11, 12 p.m. Eastern, so around my time. So I would trade anywhere between 7 p.m. Eastern and 9, 10 p.m. Eastern, okay? But the volatility on that session really picks up around 9 p.m. Eastern, okay? That's when it really starts to kick up. And then the last main point is just remember, everything that you do with these firms, you need to think about what's best for you in your mind. Because you can be the best trader in the world, but if you can't control your surroundings as far as your psychology, like if you want to see money on ticks, if you want to trade 1 contract or 3 contracts, things like that, you're going to lose, guys. And I don't want nobody to lose, because losing sucks. When you start losing, it's really hard to get out of that funk. And so I just want everybody to start off in the best foot possible. And you can do that with what Jess teaches and what I just talked about. You're going to be a lot better off than most people when they start. So does anybody have any questions?
I was gonna say, can I add something real quick?
Yeah, absolutely.
I know some people keep asking, like, for example, Celine keeps asking, what time do you trade your night session? He can tell you, and I know a lot of you like don't want to do the work. But you have to do the work. Like you have to go back and back test it and see. And I have literally given a cheat code on how to back test and see what times your pair moves the most. I put the YouTube link on here, but it's an indicator that literally you can see from glance immediately when whatever it is you want to trade moves the best. And then from there, you can find out, okay, every day or every Monday and Wednesday and Friday at this time, it gives an impulse. Like most futures traders are live trading by 9:15 in the morning Eastern Standard Time. That's when most futures traders trade, right before the stock market opens. There's a quick opportunity for a trade, and then there's a retracement in the next hour, and then an opportunity for a continuation move. So you have to like go back and do that work. Like Riley did this work. But if you get accustomed to constantly asking people what they're doing, you're always going to need people to guide you on how to trade instead of learning how to do it yourself. Okay, I want to make that clear. Riley has done that. He has put in the work, and I love that he shared so many amazing, like this was a really good session. Like I'm glad we saved you for last because I had craziness going on, but you covered so many things, especially psychology. You were really honest, straight to the point about losses, about over trading. Yesterday, I was sitting there BSing on my phone, trying to trade from my phone. I lost like $700 when I normally don't trade on my phone, and it's also a session that I don't trade. Just not even thinking that I was going to lose that amount, to be honest with you. And I was like, oh my gosh, I will never do this again. So like, you're right. You have to stick to your plan. And yes, every day is not a trading day. I agree 100%. You crushed it. This was absolutely amazing, Riley.
Thank you.
But that's it. That's all I wanted to add because I want people to understand, like, no matter what you're trading, you still have to do the research. Like, you still have to find out what works for you. I could sit here and tell people I trade every day at 10:30 in the morning. Does that mean that every day at 10:30 you're going to go to your chart and just trust me and just do that? Or will you go and do your own research just to see if maybe there's a better time that works for you? Maybe it isn't just 10:30. Maybe it's 11:30 for you. So don't be afraid to do that, you guys. I'm going to end it on that note. And if anyone has any questions, please ask in the chat so he can address them.